With June on the way, global markets have entered a period of key macro signals. So at this critical time, markets are focused on the US macro data. On June 4th and June 6th, the US will release May jobs data and non-farm payrolls. Both are very important. This week's top focus is the US Labor Department's report coming Friday, the May non-farm payrolls report. At the moment, Wall Street sentiment is already shaping the market mood. Most people on Wall Street hope that the data will come in slightly below expectations. This would boost the market hopes for Fed rate cut later this year. If there's any chance of a rate cut this year, the market would turn very optimistic because if that happens, lower rates would increase liquidity. Even without a clear rate cut expectation, if jobs data drop quickly, the Fed might take action. What kind of action? They could inject liquidity early. If liquidity is released ahead of schedule, the market will turn more optimistic. So the market may become very bullish and we could see a big rally. Many on Wall Street are hoping for numbers below expectations. So what if the numbers meet or beat expectations or even very strong? Does that mean it's bad for the market? Not necessarily. If the data comes out and the US jobs numbers are very strong, that's a great sign. It shows that the US economy is still solid. That means the long-term uptrend in the US stocks remains intact. That trend won't change. Stocks can keep moving higher. At this point, the S&P 500 and Nasdaq both at key levels could use this optimism to break through resistance. Strong optimism could help push them to new all-time highs, setting new records. If they break new highs, that will ignite the market again and bring another wave of strong bullish momentum. So no matter how you interpret it, this non-farm payrolls data should be positive for US stocks. In the long run, it shows a strong US economy, also good for stocks. If the data disappoints market expectations, the Fed might inject liquidity early or even cut rates, boosting market liquidity. That would bring optimistic sentiment. So either way, whatever the outcome, if the market embraces it, the current uptrend in stocks can be seen as a bullish signal. It could drive the market to a strong rally and create another peak. The key is after the data how the market reacts. But no matter what the market does or how people interpret it, which sectors would spark the next rally, which ones might lead, most likely it's still tech stocks. That's a market consensus. Why? Because of the AI tech wave. AI is the main focus for investors. It's also what attracts the most attention right now. AI could continue driving new uptrends, so future market optimism may also come from this sector. Where's the next catalyst? Still in high tech. As for high tech, we have to mention NVIDIA, one of the Magnificent Seven. Why highlight NVIDIA? Because right now, NVIDIA is getting the most positive news. It's highly favored, it just needs a trigger. With all this momentum behind it, NVIDIA stands out among tech giants. It's a clear leader. So let's take a closer look at NVIDIA first. NVIDIA's stock price recently has quietly climbed back above 140. It's once again the world's most valuable company. It's now just shy of its all-time high at 153, very close to record, only a step away, and its fundamentals are extremely strong. Just last week, NVIDIA reported earnings that beat expectations. Not only did it deliver great results, but what's even more promising is the outlook. More orders and smoother shipments ahead. Market demand for NVIDIA is rising. Investor expectations remain very positive. And there's another key event. This week, Chinese and US leaders will hold a call. If there's good news, who benefits most? It's NVIDIA because the Chinese market is one of NVIDIA's most important markets. Its market share there is huge. If US-China talks go well and send positive signals, it will be great news for NVIDIA. With so many positive factors right now, NVIDIA is really facing just one challenge: how to break through its previous high. So the market is closely watching its next move. This has everyone's attention, but remember, never go long right at resistance. Right now, NVIDIA is clearly at resistance. It's facing major overhead pressure, the previous high above its strong resistance zone. There's heavy trading and trapped positions there. Many are still stuck, so at this resistance level, it's not wise to go long here. But with all these positives, should we just ignore NVIDIA? Of course not. We just need a more strategic approach. If Nvidia can ride the current wave of good news and the jobs data comes out and the market reacts positively, if sentiment stays high and it's leverage both market optimism and its own fundamentals, it could break through resistance. That would be a very bullish signal. With so many positives, a breakout makes sense. If it can break out, that's actually a warning sign. So right now, don't rush into trades. Let's be patient. So wait for confirmation. Nvidia's prospects are still very bright. Its future valuation could be even higher, especially with this ongoing AI rally. Nvidia keeps gaining momentum. Its potential continues to grow. The outlook is expanding. Its market will only get bigger. Demand for its computing power keeps rising. Nvidia is a key beneficiary. This will be reflected in its stock. With such positive prospects, if it can break new highs, that would be very strange. If it fails to break out, there must be an issue. Something is wrong. So let's wait. Wait patiently. Wait for a confirmed breakout. After it breaks resistance, if you're aggressive, buy after it breaks $153. If you're more cautious, wait for a pullback to test $153 as support. Once it holds there, that's a safer entry. Wait for the pullback, see if it holds above resistance. If it finds support, that's a good buying opportunity. That's a solid entry point. Right now, it's a tricky spot. There's still overhead resistance, so don't go long right at resistance. Avoid buying here. Never buy when the stock is facing resistance. Wait for a clear breakout first. If Nvidia, even with such a bright outlook, still can break out and keeps moving sideways at this level, what happens then? It will shake market confidence in the stock. So if it continues to consolidate here, it could create negative sentiment around Nvidia because it's already at a critical level and there are also major catalysts right now. If it still can break out, the outlook will turn pessimistic. Investors will start to worry about the future. Ideally, it should break out soon. If it does, the outlook improves. As long as it breaks through this zone, there are two chances to act. At the breakout, if you're aggressive, you can buy right after breakout. If you prefer to play it safe, wait for a pullback to confirm the breakout. At that point, buying after a successful retest is a safer strategy. After the breakout, you need to see if it's a real move. The market is always worried about false breakouts. If it breaks out, then pulls back and quickly falls below support. If it drops back on the resistance and loses the support level, the market will see it as a false breakout. If that happens, downside risk increases. So for more conservative investors, wait for a confirmed breakout, then see the retest. If it doesn't fall back below support since previous resistance turns into support after breakout. If it holds above that level, that's a very safe entry point, and then the upside potential opens up. But if after the data is released, especially after the non-farm payroll report, the market turns very optimistic and bullish, driving stocks higher, but Nvidia still fails to break out and instead only briefly moves up before pulling back, then consolidates at a high level, just moving sideways, the risk of a future pullback increases. The odds of a decline go up. Because even with great fundamentals and a strong overall market sentiment, if it still can't break out, the market's expectation is that there's some underlying problem that investors may be missing. That could be hidden weakness or issues. That's why it fails to break higher, so the market turns more negative. In that case, the risk of a downturn is high. Right now, the MACD indicator also looks weak. Momentum for further gains is fading. The buying strength is declining. So at this stage, Nvidia faces a real challenge. It must break out decisively. If it doesn't, then it will head lower. There's really no middle ground here. It either breaks out or fails and moves down. So right now, if it can break out, downside is likely. This is a very critical level. That's why looking ahead, we shouldn't rush in right now. Even though the market has high expectations and Nvidia's fundamentals are strong and conditions are improving, the overall macro environment is still tough. There are still issues like trade tensions and the surging US federal deficit, as well as rising debt concerns. Still, US equities remain resilient. The overall market is holding up well. That shows that the market still has a positive outlook for the US economy. Expectations remain high. So once the non-farm payroll data comes out, regardless of whether it's positive or negative, it will probably be interpreted as bullish for the market. So for the US equities, there's little reason to be worried going forward. The odds of another move higher are still quite strong. Signs of a market rebound in US equities are clear, especially now if the S&P 500 can break to a new all-time high, the market will absolutely take off. This is a very critical moment. A breakout would spark a big surge in sentiment and activity. It could lead to a major rally, and for Nvidia among the tech giants, its current trend is especially strong. It also benefits from a series of positive factors, so it's well positioned to drive the market. Nvidia remains a key stock to watch, with high expectations from the market. Outlook remains optimistic. We will just have to wait and see. This week we might finally get some answers. Hopefully we will see a favorable result. That wraps up our quick review and analysis of NVIDIA. If you have your own thoughts, feel free to leave a comment. Let's discuss and share ideas in the comment section below.